New and improved personal tax credits and tax benefits. As we enter 2026, addressing taxes for the 2025 tax year and beyond, U.S. taxpayers stand to be the beneficiaries of a pivotal shift in American fiscal policy with the enactment of the One Big Beautiful Bill Act. This legislation has effectively made several temporary provisions of the 2017 Tax Cuts and Jobs Act permanent, while introducing aggressive new incentives for working families. Most notably, the child tax credit has been improved to a maximum of $2,200 per child, up from the previous $2,000. This credit is now indexed for inflation, ensuring it keeps pace with the cost of living in future years. Additionally, the refundable portion, the additional child tax credit, has risen to $1,700, providing deeper relief to low-income households. Beyond family credits, 2025 introduces groundbreaking new deductions specifically for the workforce. For the first time, eligible workers can claim a deduction for qualified overtime pay, up to $12,500 for individuals, and qualified tip income, up to $25,000. These provisions are designed to reward extra labor and service industry efforts by shielding a portion of those earnings from federal income tax. These deductions are temporary, currently slated to run through 2028, and are intended to provide immediate relief to middle and lower-income earners facing rising costs. Homeowners and residents in high-tax states also see a massive improved benefit through the revised state and local tax deduction cap. Previously limited to a strict $10,000, the cap has been quadrupled to $40,000 for those with a modified adjusted gross income under $500,000. This change significantly benefits taxpayers in states with high property or income taxes, potentially making it more advantageous to itemize deductions rather than taking the standard deduction, which itself has risen to $31,500 for married couples in 2025. Sustainability and infrastructure remain a focus, though the window for some benefits is narrowing. The energy-efficient home improvement credit remains robust through December 31, 2025, offering up to $3,200 annually for upgrades like heat pumps, insulation, and windows. However, taxpayers should note that many of these green energy incentives, including credits for electric vehicles and certain homes' solar installations, are scheduled to sunset or be significantly reduced after 2025. This makes the current tax year the last call for many to maximize their return on eco-friendly investments. For older Americans and those planning for the future, 2025 brings an improved senior deduction. Individuals aged 65 and older can now claim an additional $6,000 bonus deduction on top of the standard amount, provided their income is below $75,000, $150,000 for joint filers. On the savings front, the IRS has increased 401k contribution limits to $23,500, with a super catch-up provision for those aged 60 to 63, allowing them to contribute even more to their retirement accounts tax-deferred. Finally, a unique new personal use benefit has been introduced for 2025, the auto loan interest deduction. Taxpayers can now deduct up to $10,000 in interest paid on loans for vehicles assembled in the United States. This is a rare instance of the IRS allowing a deduction for personal, non-business, interest, specifically aimed at supporting domestic manufacturing. Between these niche deductions and the broad expansion of family credits, the 2025 tax season offers some of the most substantial personal tax breaks in recent decades. We welcome you to subscribe to our YouTube channel for more informative videos on taxes and finances. Thank you.